Hi, I'm Sumaira Abdi, and with me I have our equity CIO, R Srinivasan, Dinesh Balachandran, who's our head of equity, and Prasad Padala, who'll be managing the SBI Innovative Opportunities Fund. And Prasad, so first let's start with what is really the concept of this innovation fund?
Sure. So we see innovation everywhere. It's not happening, just in one sector. It is happening across sectors, across geographies. So think of it, for example, somebody like a Tesla or Netflix. So they came out of nowhere with a completely new business model and disrupted the existing business model. And if you see the kind of value creation that these guys have done, or if you look at the stock returns in the last decade, that's mind-boggling. And we believe that is actually happening now in India. And the good thing is that we are at the cusp of it, and we see that next decade we see a lot of these innovators emerging and taking market share from the incumbent players. And our strong belief is that if you look at the Nifty constitution the next decade, like after 10 years, I think it will look very different. I think you will see many of these innovators taking a place there, and we want to be positioned aligned to this trend. And we want to, and I think this fund is a perfect opportunity for investors to play this trend with us. Yeah.
So why now for this fund? Why look at launching it now? What's so good about this time?
Pace of change that we've seen in the last few decades, I think the next few decades will be a lot more. So clearly, I won't say there is no better time, but it seems like a very good time to be betting on companies that are innovating, identifying risks of disruption. Given the buoyant public markets, it's not like a lot of these companies have been raising private equity, and some of them have come into public markets. The private equity guys have made a lot of money, and the public market guys, depending on which stock you're looking at, have also made money from those levels. I reckon we will see some of these companies bypassing maybe not the first round, the second round, third round, and coming earlier to public market. So from that perspective, from a supply perspective also, I think these are interesting times.
Bala, but invariably companies like these, right, the valuations will be sky high. So how do you sort of align that in a portfolio?
Yeah, the valuations obviously matter, but I can argue that in this space, what matters more is getting the right business model and getting the right growth profile. Because in that case, even sort of optically high valuations can take care of themselves. So that is something that we would want to do in this fund. Get the growth profile right, bet on the right company essentially. If we do that, we are going to be fine. And two, when you think about these high growth companies, they also go through significant corrections. In fact, you just have to go back to 2022 when a lot of the high tech companies in US saw significant correction. Now, if you are well prepared, you will take advantage of these corrections. So even these really good companies, you will get opportunities once in a while where the valuations become much more sane and reasonable. And if you're ready, if you're prepared, you should be able to take advantage of that.
Yeah. All right, guys, thank you so much, and all the best to your team and Prasad, especially to you.
Thank you so much.
Thanks, Sumaira.
Thanks, Sumaira.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.